White House says Biden has confidence in Fed Chair Powell while Fedwatch tool predicts a 25 basis points hike this week. White House says Biden has confidence in Fed Chair Powell while Fedwatch tool predicts a 25 basis points hike this week. It has been a tumultuous week in the U.S. banking industry as three major banks collapsed, and the Federal Reserve announced that it would fully bail out two of them. Additionally, the U.S. Central Bank created the Bank Term Funding Program, BTFP, to assist failed banks
to calm markets or ease insolvency fears among investors or bank depositors. Still, officials are focusing on restoring confidence. Treasury Secretary Janet Yellen spoke on the subject yesterday in her keynote address at the American Banking Association's Washington Summit. Take a listen.
Our banking system is sound, even as it's come under some pressure. As I indicated, this is different than 2008. 2008 was a solvency crisis. Rather, what we're seeing are contagious bank runs. We demonstrated last week that the federal government is resolutely committed to taking actions that will mitigate financial stability risks where that's necessary. And every step we have taken has been intended to reassure the public that our banking system is resilient and that we stand behind the banking system.
Well, joining us now to discuss the path ahead as the Fed looks to balance the bank stability crisis as well as inflation is ABRDN research economist Abigail Watt. Abigail, thank you for joining me this morning. So as we look at this balancing act, what are you expecting to hear from Jay Powell in terms of the narrative? We know investors will all be listening very closely.
Yeah, look, I think this obviously, as you've said, is a really pivotal meeting for the Fed. Our expectations are that the Fed will deliver a 25 basis point hike, but clearly, I mean, the decision is likely on a knife edge for the Fed today. And I think in terms of their communication and how they kind of handle the press conference, I think if they choose to deliver that 25 basis point hike, then I think they're likely to kind of focus a lot more on the financial stability concerns, pushing towards kind of saying around the different tools that they have to deal with those financial stability concerns, and I guess separating the kind of fight on inflation from the kind of ongoing turmoil in the banking sector. But if they choose to not hike, then I think the press conference tone could be very different. I think they'll likely be much more hawkish in their stance in the press conference, and I think that's likely because they still have that inflation fight to go somewhat, and I think they would be conscious that pause should be predicated on the view that they will then return to hiking again once markets have calmed a little.
And it's tough because, the Fed was accused of being behind the ball when it came to recognizing how sticky inflation was going to be. So now at this point, then, depending on what they do, as we've seen across the camp, a lot of different views on what the Fed could and should do at this meeting. How much of the Fed's credibility is on the line?
I think it's a really good question. And I think this is perhaps slightly why we're erring towards the 25 basis point hike, because I think the fundamentals in the economy, we saw kind of stickier inflation. We've seen the labour market tightness persisting, and we've seen activity actually holding up fairly well into the turn of the year. And so I think in terms of the Fed's credibility, they'll be really conscious of that inflation fight and the fact that is ongoing. And I think if you think about the turmoil in the banking sector, I think as well, not hiking, does that suggest to investors that the Fed are more concerned than they perhaps currently think they are? And I think that it will be in a really important balancing act for the Fed today.
And of course, everyone keeping an eye on recession risk. Data from Bank of America researchers seeing an uptick in recession risk. 42% of fund managers surveyed predict a recession within the next 12 months. And it was just at 24% in February. How have your recession expectations changed?
So we've been expecting a recession since June last year. We originally projected that they would enter that recession by Q2 this year. We saw the strength of the data at the beginning of the year and we pushed that back. But I think there's a question as to whether some of the turmoil you've seen in the banking sector actually pulls forward the timing of that recession. So whether we see the US enter a recession over the summer instead. I think in terms of how that's shifting, how this is shifting our expectations of a recession, I think the way that we think about it is actually that some of the tightening that we're likely to see in credit conditions off the back of the banking sector turmoil might do some of the Fed's work for it. We might see kind of that tightening in financial conditions feed into the real economy a little faster, and then the Fed likely doesn't have to hike rates as much as we had originally expected them to.
So then beyond this meeting then, we know that Jennifer was talking about that sort of that formula of trying to manage inflation while also trying to decide what to do with quantitative tightening or easing there. What is your outlook on that?
So given we're expecting the US to enter a recession, and that recession that we're predicting is a run-of-the-mill recession, we're expecting a peak-to-trough decline in activity of around 2%. We expect that will have labour market impacts, and we think that ultimately some of the loosening in the labour market that will happen through that recession will lead to inflation eventually undershooting the Fed's target. And in that environment, we think it's highly likely that the Fed will cut rates back down to the zero lower bound. This is somewhere where we've had a little bit of pushback in terms of the extent to which we think the Fed will loosen policy. But I think it's likely that given the recession that we're forecasting, if that is realized, then we think the Fed will have to kind of loosen policy again through 2024.
And as we look at how some of these central banks are really addressing this, I mean, we saw the ECB determined to stay the course, even in the midst of Credit Suisse's collapse, still going for that 50 basis point hike. What are we seeing in terms of central bank coordination on this, or are we?
Please subscribe our channel and like, share Expo Bitcoin.